Happy Earned Income Tax Credit Awareness Day. I'm Justin Spicer from the Ohio State Legal Services Association, and I'm here with Megan Sullivan, Kathy Hoover, and Michael Edwards with the Low Income Taxpayer Clinic at the Legal Aid Society of Columbus, and Melissa Skilleter and Luke Menak with the Low Income Taxpayer Clinic of Southeastern Ohio Legal Services. For EITC Awareness Day, we're going to be talking about the EITC, how to claim it, who qualifies, how to find tax assistance, and more. If you have any questions, feel free to leave a comment or question below and we'll answer whatever we can. Megan, let's start off with why taxpayers should know about the Earned Income Tax Credit.
The Earned Income Tax Credit, or EITC, is a tax credit for low and moderate income families and individuals. The credit's refundable, which means that to the extent the credit is more than the tax someone owes, it creates a refund on the tax return that's then paid to the taxpayer. It has been called one of the most effective tools for lifting people out of poverty. The Brookings Institute found in 2021 that the EITC lowers income inequality between Black and white households by roughly 5 to 10% each year. The average EITC amount in Ohio in 2022 was $2,048, but the credit varies based on family size and income, so it could be as much as $6,935 for a family to claim on their return. For many people, the tax refund they get because of the EITC is the largest check or deposit of money they will receive in a given year, and many families use that refund to meet their basic living expenses.
Luke, what are the basic qualifying rules for the credit for the 2022 tax year?
So the basic qualifying rules for the EITC, a taxpayer must have worked and earned income under $59,187, have an investment income below $10,300, have a valid Social Security number, be a U.S. citizen or a resident alien, not have foreign earned income, and use one of the following filing statuses: married filing jointly, head of household, qualifying surviving spouse, single, or married filing separate. If you use the married filing separately status, you must have lived separate and apart from your spouse for the last 6 months of 2022, or were legally separated and didn't live in the same household as your spouse at the end of 2022.
So Kathy, beyond those basic qualifying rules, does a taxpayer need a qualifying child?
No, a taxpayer can claim the Earned Income Tax Credit with or without a qualifying child, but the income limits are different. A single taxpayer without children cannot make more than $16,480, and a married couple filing jointly cannot make more than $22,610.
And Michael, what is a qualifying child?
A child is a qualifying child for the EITC if they meet all 4 of these tests. Number 1, they're under age 19 at the end of the year, or under age 24 if they were a full-time student for at least 5 months of the year, or any age if the individual is permanently and totally disabled at any time during the year. Number 2, the qualifying child must be the taxpayer's child, stepchild, adopted child, or foster child, a sibling, half-sibling, or step-sibling, or a grandchild, niece, or nephew. Next, the qualifying child needs to have lived in the same home as the taxpayer for at least 6 months. Finally, the qualifying child cannot file a joint return with another person.
And what happens if a qualifying child can be claimed by more than one person, Melissa?
So if a person is a qualifying child of more than one person, only one of them can claim that child for the EITC. To choose which person can claim the qualifying child to get the EITC, you have to apply these tiebreaker rules. First, if only one person is the child's parent, then the parent may claim the child. If both parents file a joint return together, then they are the taxpayer who is able to claim the child. If both parents claim the child on separate tax return, the parent with whom the child lived for more nights throughout the year can claim the child. If the child lived with each parent the same amount of time throughout the year, then the tiebreaker is that the parent with a higher reported income may claim the child. If neither person is the child's parent, the person who had the highest reported income for that tax year. And then finally, if a parent can claim the child but doesn't, The person who had the highest adjusted gross income for the year may claim the child, but only if that person's income is more than the income of any child's parent. You can see these rules are quite complicated, so you may need to consult. There are tools on the IRS website. If you can't claim the qualifying child because of tiebreaker rules, you may be able to claim the EITC with no qualifying child.
Earlier, Kathy mentioned that a taxpayer can qualify for the EITC without a qualifying child. Luke, how does that work?
So if you don't have a qualifying child, you may be eligible for the EITC if you meet the basic qualifying rules, have a home in the United States for more than half the year, not be claimed as a qualifying child on anyone else's tax return, and be at least age 25 but under age 65. The maximum credit for eligible taxpayers with no children is $560 for 2022.
Kathy, if people have additional questions about the EITC, what resources are available?
The IRS has an EITC assistant to check to see if you qualify for the credit. To use their assistant, you can visit irs.gov/EITC assistant. You can also download publication 596 from irs.gov.
Let's move to the child tax credit. Michael, what changed for tax year 2022?
Unlike tax years during COVID, the child tax credit, or CTC, is now worth up to $2,000 per qualifying child. However, only $1,500 is refundable, meaning if you don't owe taxes or your credit is more than the taxes you owe, you can get up to $1,500 back in your tax refund per child.
Melissa, what are the requirements to claim the child tax credit?
To claim the child tax credit, a taxpayer needs to have more than $2,500 in earnings, have a qualifying child, and have themselves a Social Security number or an ITIN, which is an individual taxpayer identification number.
Do the EITC qualifying child rules apply to the CTC, Luke?
Kinda. So the child must be the taxpayer's child, grandchild, stepchild, or adopted child, their younger sibling, step sibling, half sibling, or their descendant, or a foster child placed with the taxpayer by a government agency. The child must have been under age 17 on December 31st of 2022. The child must have lived with the taxpayer for more than half of the year, and the child claimed must have a valid Social Security number.
Megan, what should taxpayers expect with their refund if they claim the EITC or the CTC?
By law, the IRS can't issue an EITC or CTC refund before mid-February. So if you claimed the EITC or CTC, child tax credit, on your return, you can expect to get your refund by February 28th if you file online and if you choose to get the refund by direct deposit, and the IRS found no issues with the return. The IRS recommends checking "Where's my refund" for a personalized refund date, and you can find it at irs.gov/refund.
Before we finish up, Kathy, can you update our viewers on how to find free tax filing resources?
So sure, there are several free tax preparation options for taxpayers who qualify for services based on income. If you're in Franklin County, you can call 211 from any 614 area code phone or 614-221-2255 to schedule an appointment with a free tax preparation site through Tax Time of Central Ohio. Tax Time Central Ohio is a United Way-based organization that coordinates free tax preparation sites in the area. The preparers at these sites are free, trained, and certified by the IRS. Tax Time, in partnership with Nationwide Children's Hospital, will be hosting a Super Saturday event on Saturday, February 25th from 9 to 5 p.m. In addition to free tax preparation, the event will feature representatives from community organizations and volunteer attorneys from the Legal Aid Society of Columbus to answer your civil legal questions. You can register the same 211 phone number. There will be some availability for walk-in participants.
Some counties besides Franklin also offer referrals to free tax sites through 211. If your county is not one of them, ask your local United Way if they are offering free tax preparation services. People who qualify for the IRS Volunteer Income Tax Assistance, or VITA, can find free tax prep help at irs.gov/VITA, VITA. You can also look for free tax preparation help through the AARP Tax Aid at taxaid.aarpfoundation.org to search for a tax prep site.
There are also online options for help, including www.getyourrefund.org. This website is staffed by trained volunteers who can help you prepare your returns and communicate with you by phone, email, and text. This website opens on January 31st. If you'd rather prepare your own taxes using guided software, you can use myfreetaxes.com/UWCO or visit irs.gov/freefile. The IRS Free File site went live on January 13th and is ready for taxpayers to use. The IRS started accepting individual income tax returns on January 23rd. To be eligible, taxpayers must make $73,000 or less to use the IRS free filing site.
Great. Thanks, tax team, and thanks everyone for listening. Join us next time on February 3rd when we continue our self-employment series, and we'll talk about Schedule C. And remember, this segment and all the others in our Tax Chat series are available on our Facebook page. Thanks, everyone, and we'll see you next time.